With the average property price in Toronto soaring past $1 million, many homeowners find themselves asking this particular question. Does simply owning a home in Toronto make them a millionaire? And what does being a millionaire mean exactly in this economy? And does that translate to financial freedom or just bigger costs and a higher mortgage? In this video, I'm going to be diving deep into an article that was written on the CTV News website covering this topic, and I'm going to give you my insights on what financial freedom and owning property in Toronto actually means. By the way, my name is Sid Sir from Team Sir Real Estate. I have a local real estate team right here in the Greater Toronto area. We help clients with buying, selling, leasing, investing, as well as all aspects of pre-construction condos. If this is your first time on this channel, please consider subscribing for all things real estate. All right, so let's dive right into the article. This is posted on the ctvnews.ca website. I'm going to link this in the description. It's titled, Are Toronto Homeowners Technically Millionaires? Here's what experts have to say. As the cost of living in Toronto continues to rise, the definition of wealth in the city has become increasingly blurred. The average home across all property types in the city of Toronto sold for $1,400,000 in January, according to the Toronto Regional Real Estate Board data. This is far off the peak of $1,334,000 reached in February of 2022, prior to the beginning of an aggressive campaign by the Bank of Canada to raise interest rates. But it still means that Torontonians who own their homes outright are sitting on an asset worth in excess of $1 million, while others who perhaps entered the market in 2022 could owe more on their mortgage than their home is actually worth. So what actually makes someone wealthy in the city of Toronto? Okay, I'm going to just break down what this article is saying in this part. So essentially, right now we're sitting in March of 2025, and the average property type in the city of Toronto, we're talking condos, townhouses, semis, and detached. When you take the average of all of them, the average is around $1,040,000. And at the peak of the market in February of 2022, the average price was $1,300,000. So that's over a $300,000 correction. Now, what this is alluding to here is that if you are somebody that purchased a property at the peak of the market, let's just say you bought a property at the peak for $1.3 million and it is now worth $1 million, there's a good chance you have no equity and you actually owe more to the bank than you have equity in your home. Now, the equity is the property value today, the home's value, minus what you owe as mortgage. So let's just say you bought a property for $1.3 million in February of 2022, and you put down 20%, which is roughly $250,000, and you have just over $1 million mortgage on the property. And if that property today is worth $1 million, that means you actually owe more on that property. So if you were to sell it today, you're not going to make anything. You're going to have to pay back the bank with whatever is left, whatever it's valued at, and possibly owe the bank more money. So you have no equity in that. You have probably negative equity in the property. So what actually makes someone wealthy in the city of Toronto? Being a millionaire and financially independent are two separate ideas, says Jim Chuang, an investor and financial educator who has over 1 million followers across social media. You could be a millionaire with a lot of equity in consumer products like cars and houses, but you won't be financially independent. The Wellesley Institute suggests the annual cost of thriving for a single working age adult in Toronto now stands at $61,654 after taxes. Yet, despite soaring property values, the minimum wage in Ontario stands at just $17.20, not to mention Mayor Olivia Chow's 2025 budget, which includes a 6.9% property tax hike, adding another layer of financial pressure. This is a very good point because, we need to talk about what is being financially free versus being a millionaire on paper, right? Because if you think about it, anybody that has $1 million property that's worth $1 million in Toronto, they might be a millionaire on paper, but also there's context involved. How much of that is equity, right? Again, we talked about equity is what the property is worth minus what you owe on the property, aka your mortgage. And financially free means that, do you have income that supports your lifestyle, right? If you're following, let's just say, Robert Kiyosaki's classic book, Rich Dad, Poor Dad, in which he talks about having income-producing assets that pay you every month, which you're using then to pay down your debts or pay for your lifestyle, that is what most people would equate to financial freedom. So even if you are somebody that has $1 million property on paper, and even let's just say the property is free and clear, there's no mortgage, and you own the property outright, you have $1 million worth of equity, does that make you financially free? Well, now you have to access that equity in the form of more debt, right? Which is you go to the bank to maybe get a home equity line of credit, or you get a mortgage on the property, pull out equity. So you're still in debt, and I think what this is alluding to is that you need some sort of income to be financially free and not just have an asset that isn't exactly liquid, right? Because the traditional way of being a millionaire is having $1 million cash in your bank account as opposed to having $1 million asset, of which maybe you have a few $100,000 in equity. So equity versus actual wealth. Ron Butler, a seasoned mortgage broker and owner of Butler Mortgage, says that idea of being a millionaire based solely on home value is misleading. I agree with this. There's a ton of people in Toronto who earn $1 million, but the old-fashioned way of looking at it is whether you've got $1 million in the bank. We have a tremendous number of people in Toronto who have a house worth more than $1 million, but if you've got $1 million house and a $900,000 mortgage, you're definitely not a millionaire. And this, again, he points to here the same thing, which is home equity. So again, in this case, if you have $1 million house and your mortgage is $900,000, well, you have $100,000 in equity, doesn't exactly make you a millionaire if you were to sell that property today. If you don't have the income to support your lifestyle, either from investments or employment, then you're eventually going to have to find some way to get money out of that house, and that isn't total financial freedom. Again, this is alluding to what I said earlier about accessing the money, the equity from your house in the form of a home equity line of credit, which really is another form of debt. But, do you have any income producing assets? Let's just say another house that you've rented out that is giving you cash flow every month, positive cash flow every month that you're then using to pay down another debt, or you're using to enjoy a certain lifestyle. Maybe you're buying clothes, or you're buying, going out for fancy dinners, or you're going on trips. Right? Is that being funded through your 9 to 5, or is that being funded through cash flowing assets? That is what most people consider to be financial freedom. RBC previously said that the decline in home prices in the GTA in 2022 amounted to a historic housing correction. However, the market has since stabilized and appears to be on the upswing once again. The Toronto Regional Real Estate Board has predicted that home sales will increase by 12% this year, with the average selling price reaching $1,147,000. About 45% of Canadian homeowners have fully paid off their mortgages, Butler notes. So what does that mean? Does that mean Toronto is a city of millionaires? Not exactly, experts say. Monthly income and investments to achieve financial independence. Chuang says the longer your investments cover your consumption, the more free you become. In Toronto, the threshold is high. To be comfortable, a couple needs to make about $20,000 a month, he estimates. If you have $1 million house with no debt, you're a millionaire from an accounting perspective, but ideally, you want to be both a millionaire and financially free. That's a great point, right? So again, going back to my example of if you have $1 million property that's free and clear, which means you don't have a mortgage on it, you own it outright, there's no bank involved, there's no mortgages involved, you technically have $1 million in equity, and you are a millionaire on paper. Well, how is that exactly then supporting your monthly income, right? How is that supporting you being financially free? Because financial freedom really comes from your ability to live a certain lifestyle with passive income, with a business that you have that's generating income, or income producing assets that's paying you month after month. Just because your house is worth $1 million doesn't mean you are worth $1 million because you're not sitting on $1 million equity. He says if you bought pre-pandemic, I'm talking 2016 to 2019, and you're sitting on $1 million equity, then maybe. Milanes says luxury in Toronto has shifted significantly. 5 or 10 years ago, you could get a freehold for around $1 million in Scarborough, Etobicoke, parts of North York, parts of Leslieville. He said right now $1 million gets you a decent-sized condo, townhouse, or a fixer-upper in the east or west end. I'm not exactly sure what this particular agent is referring to here. I mean, I do business in the east and west end, and you can definitely find a lot of, I would like to know his definition of a decent-sized condo, but, let's just say a decent-sized condo is 700-800 square feet, 1 bedroom, 1 plus den even, a bigger condo. You can easily find one of those in the east and west end for, I've seen condos right now under $600,000. But if you're talking luxury and luxury finishes and in particular boutique buildings, then yes, sure, it can go up to that $1 million mark. But there's a lot of deals, especially in the condo market right now. But regardless, this is a very interesting article because it really talks about something that a lot of people have wondered for a long time, right? Like people joke and say, if you own a house in Toronto, you're a millionaire. But what does that mean exactly? Because a lot of people, especially in Toronto, who have homes passed down from their family members, let's just say, who don't have a mortgage on the property and it's being passed on to you, you've technically inherited that property and it may be worth $1 million, even in equity $1 million. But what does that truly mean? Can you access that money right away? Sure, you can sell it and you can access that money. But then there's the notion of taxes being involved, capital gains being involved. But if you own that property, are you a millionaire? I would love to hear your thoughts. Do you think that if you own a property in Toronto and it's worth $1 million, does that actually make you a millionaire? What does a millionaire mean to you? I'm curious to hear your thoughts in the comments. Let me know if you equate financial freedom with owning a property that's worth $1 million. That's it for this video, guys. If you found this video valuable, please give it a like. And of course, if you're new, please don't forget to subscribe to my channel. Thanks for watching. Take care.